Welcome to Serle Court's podcast. I'm Suzanne Rab and I specialise in EU and competition law and state aid. I'm Professor of Commercial Law at Brunel University. This podcast will discuss state aid in challenging times. What next for subsidy regulation in the UK after coronavirus and Brexit? I'll consider how the EU state aid regime has responded to increasing state support measures aimed at supporting business to manage the liquidity challenges of the coronavirus pandemic. I will also consider whether the UK state aid regime, expected to be operational at the end of this year, could react with similar flexibility. With expectations that the impact in the UK is likely to peak in a matter of days, this podcast is a just-in-time rather than just-in-case opportunity to update on this important and evolving area. By way of overview, I'll start by discussing how the state aid regime in the EU has reacted to the outbreak of the coronavirus. No longer business as usual, the regime has had to adopt measures with agility, and the first measure being approved in 24 hours. I'll also look at the significance for the UK, where there is prevailing uncertainty as to the shape and form of the UK's future subsidy control regime, which will take place at the end of the transition process following Brexit. Questions do remain over the role of the level playing field in future trade negotiations, and there are calls from the EU that competition and state aid rules will have to follow the EU approach. I will also discuss the scenario of no trade deal being negotiated with the EU and what might be the difference in terms of the impact of a WTO-inspired regime or a regime more modelled on existing EU state aid rules. I will not be the first to say that the month of March has perhaps been the longest month we have known. Governments around the world have been adopting increasingly strenuous support measures aimed at tackling the economic impact of the coronavirus pandemic. In the UK, the expenditure is expected to be as much as 15% of GDP in terms of support measures, and that number is mounting by the day. In the United States, similar percentages are recorded, and states such as Austria, Belgium, Germany, and France have been adopting similar measures. The first European Commission approval decision came on the 12th of March. And there, the Commission approved €12 million in terms of a state support scheme to compensate for the damage caused by cancellations of large public events due to the COVID-19 outbreak. What was interesting about this measure is that it was approved in a matter of 24 hours. This is reminiscent of the experience during the 2008 financial crisis, where similar measures were approved in a matter of hours. In this case, the Commission used Article 1072B of the TFEU. This allows member states to compensate specific companies or sectors for the damage caused directly by exceptional circumstances. It seems that the current experience can't be treated as a natural disaster and therefore eligible for automatic exemption under the General Block Exemption Regulation. And it's that feature that made individual notification necessary in this case. Very quickly, on the heels of this, the Commission then adopted a more general measure in the form of a temporary framework for state aid. This came on the 19th of March and deals with direct grants, tax advantages, guarantees, subsidised loans, safeguards for banks, and short-term export credit insurance. It's expected that the framework will be in place until the end of December, But every day there are new pressures on the system, and there have been updates to the initial temporary framework that has been put in place. The impact will be particularly severe for certain economic sectors, and certainly the hospitality, travel, retail industries are in the eye of the storm. A particular spotlight has been put on the aviation sector. Even before the pandemic, this industry was experiencing serious economic challenge, and the demise of household names such as Thomas Cook and Flybe have brought into sharp perspective the pressures on the aviation sector in the UK. Not a day goes by when there are reports of calls for increasing government measures, and the European Commission has already approved a French scheme for deferring payment by airlines of certain taxes to mitigate the economic impact of the coronavirus outbreak. This is expected to be an evolving area, but perhaps a more fundamental question is what needs to be done to ensure economic assistance is provided in a coordinated and targeted manner. And it may well be that there are some losers out of this experience, because clearly we will be returning to a world which will be quite different from the one that preceded this pandemic. Turning now to the UK's future state aid regime. Before the pandemic, it was expected that Brexit wouldn't necessarily translate into higher levels of direct public support to businesses in the UK. And historically, the UK has perhaps not been the most generous of EU member states in providing economic assistance to business that has required notification or need to be considered for compatibility with state aid rules. The framework for future regulation has as its starting point a new independent UK state aid regime to take effect upon the end of the transition process, currently expected to be the end of December of 2020. And at that point, the CMA will become the UK's independent state aid authority to take over what is effectively the role of the European Commission today. If the UK leaves the European Union at the end of that period without there being an agreement on a future relationship, the default position is that the WTO, World Trade Organization rules, will apply. But at the same time, the UK is expected to have its own bespoke state aid or subsidy control regime, to use a neutral term. So at the moment, there is still some uncertainty as to what shape that future regime will take. But as an initial observation, I can say that should any future agreement be concluded with the European Union, it is expected that rules which borrow or draw their inspiration from the EU will form part of that. So mapping out the future scenarios, until the end of the year, unless there is an extension to the current transition period, and we will know about that by the end of June 2020, the state aid rules remain business as usual and will be as currently, where the EU Commission is the overarching state aid regulator and needs to approve individual measures where notifications are required. At the end of that transition period, there will be what has been referred to as a modified backstop, the effect of which is to ensure that there will be no hard border between Northern Ireland and the Republic of Ireland. The practical effect of this is to keep certain aspects of Northern Ireland's regulation within the EU framework. there's a lot of detail around this, but fundamentally, that is one of the areas of some uncertainty going forwards. In the area of future relationship, should no trade deal be concluded with the European Union, then, as I have explained, the default position is WTO rules, but the UK will be free to adopt what kind of subsidy control regime, which may be WTO plus in terms of enhanced scrutiny. So up to the end of the transition period, regarding UK aid that was granted before the end of that period, the European Commission will be able to initiate new proceedings that relate to alleged unlawful state aid for a period of 4 years after the end of the transition period, and follow up on those proceedings thereafter. Many parties considering future options are having simultaneous conversations with the UK regulator as well as the European Commission, because it may be that notifications need to be made before the end of the transition period, but do not run their full course. Thinking about possible future models for UK and EU cooperation in the area of state aid. And there are a few models with varying degrees of control on state aid, as we see in agreements between the EU and third countries. And fundamentally, the closer the degree of market integration, the more state aid regulation forms part of that. So we see parallel systems such as the European Economic Area Agreement and the EU-Ukraine Association. We also see some WTO plus type systems which build on the WTO agreement on subsidies and countervailing measures. Again, seen in EU trade agreements with South Korea, Japan, and Canada, which do contain some additions over and above the WTO default system. So let's think about the differences between the state aid regime and the WTO measures. So they do involve quite similar concepts of financial contributions. So a subsidy under the WTO agreement would include grants and loans, equity injections, etc., given by a government or a public body, conferring a benefit and targeted at certain enterprises or industries. A distinction needs to be drawn between prohibitive and actionable subsidies. So the prohibited subsidies require recipients to meet export targets or use domestic goods instead of importing goods. And in this instance, the WTO prioritises complaints very quickly by handling them in a more expeditious manner than those relating to actionable subsidies. In respect of the latter, what we're concerned with is a subsidy that is not prohibited outright, it is allowed, but it is actionable. These can be challenged by other WTO countries if the subsidies harm their domestic producers. But the complaining country needs to show harm to its domestic industry. And if the WTO's dispute and settlement body rules that the subsidy has harmful effects, it must either be withdrawn or its damaging effect removed. Another concept is that of countervailing duties, which are taxed effectively on the imports of subsidised goods, which make these more expensive to buy. And again, these can usually be imposed for 5 years, special rules for agriculture. To be allowed to impose these measures, a country must carry out a detailed investigation to show that certain imports are subsidised and that these are hurting the domestic industries. So some very similar concepts between EU state aid rules and WTO rules. But there are some important differences. The first relates to the default position. Under state aid rules, state aid is unlawful ex ante unless it is notified to and approved by the European Commission or falls within an exemption. In the WTO world, subsidies not targeted at exports or import substitution are allowed unless another country can demonstrate harm to the domestic industry. The scope of them also differs, with state aid covering goods, services and movement in capital, whereas the WTO rules concern goods. One of the more fundamental differences is really who can take action. Under state aid rules, businesses and individuals may lodge a complaint with the European Commission and bring certain claims in the national court. But from an enforcement perspective, under the WTO rules, WTO member states are the parties to take action, and that has been one of the causes for concern as to the efficacy of the WTO rules to achieve an effective remedy, because private actors do not have standing before the WTO. As to recovery, most infringement decisions of the European Commission in respect of state aid which has been unlawfully granted will contain a recovery order requiring the member state to recover the unlawful assistance thereby granted, usually with interest. Whereas under the WTO rules, dispute settlement mechanisms exist, which may include countervailing duties being imposed by the affected state. So to conclude on state aid and subsidy control in challenging times, it is undeniable that the pandemic has called for agility in applying state aid rules in response to a range of economic measures, many of which are occurring in real time. And we have seen how the impact has been particularly severe in certain areas, including aviation, hospitality and retail. There have been indications of a UK political will to depart from the EU state aid regime as a model for the UK's future subsidy control in the UK following Brexit. But as developments continue to occur, that may require a rethink. Historically, the UK has granted comparatively less state aid compared to its EU counterparts, and has actually been quite vocal in terms of fairness and a level playing field regarding the EU's approach to third countries, of which we will be one at the end of the transition period. So in this time of uncertainty, one thing that we can be certain about is that the future months, maybe years, will remain characterised by some uncertainty. The form and approach to state aid rules by a post-UK Brexit will be politically driven, and it will depend on the UK's relations with the EU and other countries.